Diversification is completely overrated. Now, before you get upset, let me tell you why. I speak to thousands of millionaires, high net worth, ultra high net worth individuals every year. And I have never to this day found anyone that's made significant net worth that has told me that they did it through diversification. Where they really made their money is by concentration. They concentrated on their business and reinvested back in their business, to which they eventually sold or just became more successful. They concentrated into real estate, either one asset class or multiple real estate asset classes, and kept reinvesting. And or they did it by some other outsized factor where they got really lucky. A buddy told them about a business and they got early into a business that went bazooka, and they sold the farm, invested in this one asset, and it just went 100,000x. I've never met someone that says, oh yeah, I've been super rich because I've been dollar cost averaging and investing in 300 different asset classes and built this whole diversification model from my financial advisor, and I became a mega millionaire. It doesn't exist. And let me just tell you about why I choose to not focus on diversification in my own life. My own personal net worth and kind of overall pie chart, I'm roughly about 80% in mobile home parks. And someone says, wow, Ben, you're really concentrated. I feel completely comfortable with that. And why is that? It's because that is my subject matter expertise. I understand every single investment I am in. I have control of those investments. I know where the money comes in. I know where the risks are. I know where the long-term opportunity is. Also, those 80% of those real estate assets produce for me a tax efficient cash flow. It produces a monthly cash flow that I pay zero taxes on. And this is what allows me to live and then be able to then continue to use that excess cash flow to invest in other things. So what makes up the other 20% of my own personal portfolio? Well, I hold on average 5 to 10% of my net worth in cash at any given time. I would suggest everyone needs to hold a rainy day fund. The other, call it 5% is like precious metals. So this could also be a cash equivalent. You can look at this in the same way you look at cash, right? Gold and silver. You can go and transact it. I can go down to my local gold shop, sell my gold right away, trade it in for cash. There's my liquidity. There's my buffer. All the rest is either VC angel investments or stock portfolio. And I don't care whether it goes up, down, sideways. The reason why I don't care is because I've already built in my own personal defense through my real estate holdings that's diversified through different types of investments, different types of real estate, geographically diversified by year when I invested, diversified by overall quality. There's my diversification. I'm a true real estate investor. And the reason why I don't care, or at least it doesn't keep me up at night if the stock market goes up or down or sideways, or if my VC investments turn into 0 or 100x, is because I feel like I'm playing with house money because I have a concentrated portfolio in real estate that pays me every month that I can depend on, that's diversified through how many different investments I have. And I am able to then have my cash reserve. So then if stuff does hit the fan, I'm able to at least live for 1 to 1.5 years without relying on any income. That way I can get back on my feet, and then I can go and take outsized risk in the stock market or venture capital or angel startup type investments. 1, for fun, but 2, it'd be pretty nice if one of these popped one day. So that's why I think diversification is completely overrated, and you should think it is as well.